Welcome traders, freetradingvideos.com. This is Breakout Trader. I'm going to take you through a trade I entered on the Dow. I was trading the Dow futures, but I'm going to show you on the actual Dow chart just to appeal to a wider audience. You can see here's the open of the market. We drop straight down, big drop down, and come straight back up. From here we slowly come back down. We're trying to test these lows here. Now we can see right here we create a higher swing low. We move up, come down, a second higher low, and we go higher to a higher swing high. At that point there, what I was looking at was a bear flag coming right through here. We can see right here we break below that trend line and down we come. Now this range here, okay, the difference between the swing high to the swing low here should have been equivalent to this range here if the momentum was to stay the same. Now we can see that the momentum here is very, very large. Big move to the downside. The move to the downside here is much, much less. What that is slowing momentum. Okay, slowing of the selling pressure. So when we have slowing momentum, what we start to look for is a reversal pattern to the upside. So what we started to witness from here was the falling wedge. You can see the upper trend line is coming down at a very, very fast rate, very steep. You can see the lower trend line is nowhere near as aggressive. So the swing highs are getting lower at a fast rate, but the swing lows are not pushing as far down as they should be. Meaning the range between the swing high and the swing low is becoming less and less and less. So I witnessed this developing. I walked into my office at about 11:15, 11:20 this morning, and I see this setup. The first setup was the bear flag. I was like, oh, this looks like a nice short. Okay, did not enter the short because of that long lower shadow right there. It came down, came back up, and at that point there we had the rising wedge. So we came down, we came back here, and I see this doji candle sitting right on the lower trend line. I enter the position right here with a stop down here, just below the low. Now, as we go forward here, okay, we do not break the upper trend line. We close back below it, okay. We're coming right down into my stop. And this candle right here comes down just low enough, comes down to the tick, hits my stop loss. Right on the dot. Takes me out of the trade and then breaks the upper trend line. So right here, if I say, well, if we get a higher candle's high, I'm going to enter that position. Right there, we get the higher candle high. I'm in that trade at 92.80 on the Dow futures. Stop loss is 91.95. So I'm risking 85 Dow points. We come back down, we can see that the candle's low does not go down to touch that stop loss, and from here we just rocket to the upside. Now, I left my office on this candle here. I accepted the risk between my entry and my stop loss and left the office. There's no point hanging around watching it. It doesn't do anything for you. So this rockets up to the upside, pulls back, continues higher. 9,600 was my target. Now, if I was in the office at 2 o'clock, I would have exited the position at the target, just taking the trade off the table. I was not. I did not come back to the office till 3 o'clock. And this right here is what I witnessed. I'm like, wow, nice move to the upside. We get a double top being reversed by a double bottom. So you can see we get the first swing high here. Next swing high is equal to. That's that double top. That is the M formation for murder. So we can see that right there. Now, an M formation is a reversal pattern. When you break below the low right there, you get a complete top. We then trade down, we trade straight back up. This here is what we call the kiss of death. When we trade back into what was once support and now resistance off a double top, that's a kiss of death. This thing should plummet. It does not. What happens is we come down, we trade back up, we get a low in the same region as the previous low, which is now a double bottom. The double bottom is the only formation that can reverse that double top. Well, not the only formation, but a major formation that will reverse that double top. So right here, I'm looking at this saying, well, if we can break it back above this high, I'll hold this position. I'll move the stop up to under this 94.25 area and hold this position. On the next candle, this is what we get. We start coming down. Without that candle going higher, when we come down through this 9,500 area is where I exit the position. Now from here we get a nice candle up. Okay, when I exit that position, I left the office. I said, thanks for coming. I'll take the profit. I'm out of here. And from whatever reason, after that big candle up, this market just plummets. In a complex market environment, we want these simple formations, these simple setups to produce profits. Okay, we had a falling wedge here, which is a bullish, my favorite bullish setup, technical setup. The second thing we had to confirm that bullish setup was a bullish divergence on the MACD. We can see in the price action, the candlesticks, we have lower swing lows, and the MACD, we have higher swing lows. That's a bullish divergence. Thanks for attending freetradingvideos.com. Till next time, this is Breakout.